Ladies and gentlemen, welcome. So the Nvidia Fireside chat is about to start. The music has just got cut off, so they should be coming in any second now. Just before we go into it, I'll show you guys the stock price really quickly, and then I'll keep up with it in the chat, throwing it up in case there is any movement in the stock as the presentation goes on. It is an audio-only conversation, but still, there can be some new details that are shown or talked about during this presentation that, could be useful to some investors. So keep in mind, I do have it running here. If they're starting right now. So I'm going to switch over right now.
Conference, NVIDIA's CFO, Colette Kress. Thank you so much for being here. I think you want to read a safe harbor before we start?
I do. As a reminder, this presentation contains forward-looking statements, and investors are advised to read our reports filed with the SEC for information related to risks and uncertainties facing our business.
I guess I'll read ours too. For important disclosures, please see the Morgan Stanley Research Disclosure website at morganstanley.com/researchdisclosures. If you have questions, please reach out to your sales rep. Anyway, that out of the way. So thank you so much for being here. We could take 3 hours if we had it, but I want to talk about AI, demand drivers, products, supply chain, export controls, and margins, kind of in that sequence. So, maybe just starting with demand. You had a really good quarter. You grew 18% sequentially in data center for a quarter where the majority of your revenue was Hopper, and Blackwell had been delayed a couple times in different forms, and it's clearly kind of a higher ROI product, and you're still selling a lot of Hoppers. So it seems to me that that's a pretty strong indication of demand. There's no reason to pull forward products like that. Seems like you have, a very strong demand profile. Can you just talk to that? How did you have a quarter like that when Blackwell wasn't yet doing the heavy lifting?
Yeah, a good question. So we did very well in Q4 in terms of growth. Keep in mind, Blackwell is an amazing architecture, but let's not forget how important Hopper is in terms of an architecture. It's also an amazing, great product, or essentially it's the number 2 best product that is out there. So our H200 did grow sequentially, and this is important. People ask us why. Why are people buying Hopper when they know Blackwell is there? Many of our customers are finishing out their builds in terms of the data center, and or adding on more to an existing cluster that they need more compute to do so. Several customers would like to be in line right now in terms of Blackwell. However, it is going to take some time because of supply. So it is perfectly fine for them to take Hoppers. Hoppers is a great opportunity for them to just get started and move in there. So we'll continue to see probably Blackwell and Hopper being sold together. That is something that we've seen architecture to architecture. But Blackwell, again, is an amazing architecture, and I'm sure we'll talk more about that.
Great, thank you. You also made a comment on the earnings call that I thought was really intriguing, that post-training and model conditioning can require orders of magnitude more compute than pre-training. That's a surprising comment to me. I feel like a year ago we were thinking this market's mostly what we're now calling pre-training. Then you talk about inference being a large portion of revenue. Now you're talking about these kind of post-model training and conditioning, or post-training and conditioning. Can you just talk about what's driving that statement, where that compute demand is coming from?
Yeah, very good question. It's actually one of our 3 scaling laws that we see. We used to talk about training as just a whole, that training is an important market, inference is an important market. Both of them are. But within training, the very onset of building a foundation model, the pre-training phase, doesn't limit it to all that it needs to do. Even in pre-training, we continue to see more and more compute being needed as they work in terms of, again, refining the model. And multimodal is a very big part of pre-training as well, where we are looking in terms of video, pictures, and or something just as a graph that would be on a PDF. How do you incorporate that even in terms of your pre-trained model and fine-tuning that? But yes, post-training is a magnitude of increase in terms of the need of compute. This is when you're fine-tuning your models. You're fine-tuning, distilling it, getting it to a very tight group that can be also available for a very important part of training, and that's going to be the reasoning part. Reasoning is a very key driver of the additional compute that is going to be necessary, and necessary fully for the inferencing as well. So the growth that we see already in post-training and the size of models that will be built will continue to enhance the amount of compute necessary.
Thank you for that. And then, the other interesting dynamic is the inference and reasoning models. We're moving to much more complicated tasks on the inference side. So it's clear that the compute goes up. And you guys have sort of talked about the DeepSeek R1 as an indication of that, one of the first big reasoning models and a positive. Obviously, the stock market had some anxiety about that. And I guess maybe you could just talk to the concern of, there's some comments that you can do DeepSeek inference on lower end hardware, that they can charge very low token prices. Just kind of talk us through, why that's a clear positive to you guys that we're doing reasoning at this level.
Okay. Reasoning is an important new phase of the types of models that we will see. Why are reasoning models going to be with us? Because the future is really about the software changes and building out agentic software solutions. So you're going to need models that are actually making decisions and reasoning. Now, what arrived was one model in terms of reasoning. Now, there's different ways to create that reasoning model that DeepSeek did, but one of the most important things that was well understood is the type of data that you need, the type of expert data that you need to answer these long-thinking, reasoning types of inferencing that you'll get will be very important. So even what we have built in terms of an inferencing platform, inferencing has been near and dear to us for most of the decade, knowing that this will be in a very, very important market. And we've actually created systems now highly, highly focused in terms of that inferencing stage. Inferencing for us, we've probably improved its performance by more than 200x just over the last 2 years in what we've done and accomplished. But thinking through what they did in terms of building a model as they did, a different technique with more experts than some of the new reasoning models that you would see. But again, the amount of compute that's only right now focusing in a certain region of the world, you will still need more as these advanced reasoning models come together, and particularly for the stage of inferencing. Let's kind of step back in terms of what the amount of token generation that will also be there with something like a DeepSeek model or an OpenAI model, or what you may even see in terms of Grok. Many of these new reasoning models are actually producing tokens up front in terms of to give you a theory of their thought pattern on how they determined the reasoning. That is additional tokens that will even start out even before they've determined an end answer of that. So these are also increasing token generation, increasing overall revenue opportunity that they are all putting in terms of these models.
Okay, very helpful, thank you. So we shift to talk about products a little bit. Blackwell, you did $11 billion in the quarter, which was a big number, a bigger number than I thought, certainly. But you've also talked about unprecedented complexity and many different flavors, that the different versions and variants are taking time to get out. Can you talk about where we are with that complexity? Maybe with GB200 in particular, we've obviously made some progress. There's general availability in multiple places. What hurdles do you still have going forward on the supply chain there?
Yeah, we were really pleased with Q4 to bring Blackwell to market. We had expected in the onset of possibly several $billion worth of Blackwell, but we actually did 11 billion of that. And that was pure effort with our suppliers and with our partners bringing that to market as supply was going to be necessary. What we were really focused on was our customers. We had made a change back in Q3 to the mask. We had the chip. It was all in perfect condition and ready to go. And yes, our systems are sophisticated in bringing them to market, but all we want to do is to make sure our customers get back on track in building these and putting them into the data centers for their end customers that they have. So we're back on track. We are going to spend another quarter this Q1, again, trying to reach the availability that is going to be necessary in the cloud with Blackwell and shipping this to customers. So another quarter of expediting and a very, very strong ramp of Blackwell. Each of the different configurations are important. There are configurations that are available for water-cooled. There are configurations that are really been put together for inferencing. And for one of the first times, some of these large clusters will be uniquely just for inferencing up front. So we're working well with our suppliers. They have been extremely helpful, and I think, again, it will be another great quarter.
Great, thank you for that. And then you teased out on the earnings call that at GTC, which is just a couple of weeks away now, your developers forum, we'll hear more about Blackwell Ultra. And I feel like you're wrestling with the complexity around the current variant, and now we're talking about new variants. Does that incur more complexity, or are there things you can do to sort of address some of these early issues with some of those new products?
Yeah, so one of the parts of our Blackwell architecture is we've moved to a data center scale type of infrastructure. We are making sure that we are thinking through every aspect of data coming into the data center, how to utilize it effectively, and really get to a position that you have the lowest total cost of ownership of the entire cluster together. Now, that enabled within our GB200, our existing architecture and market, and we'll see something similar when we move to the Ultra version. So our positioning of how we've gotten to this data center scale will take us far as we go forward, and we are not expecting any really challenges. It's the same architecture as we move to the Ultra version with different types of components, pieces of it. But again, it will be another great architecture for us.
Great, thank you. So maybe if we could talk about product in the context of competition. You know, there's been a fair amount of enthusiasm for custom silicon or ASICs, which are right now about 10% of the market. And people sort of focus on, you know, NVIDIA's got really big numbers, and those are smaller numbers, so those numbers can grow more. My view has kind of been that you can hold that 90% share unless something changes. And, you know, what can you do to ensure that you maintain that incumbency benefit that you have? And why is there so much investment in custom silicon from your customers when you're delivering so much performance?
Yeah. The focus in terms of custom silicon, not exactly a new discussion, probably for 7 years, indicating here is going to be an important move in terms of the custom silicon. But it's very well understood. It's very difficult. It's very difficult what we do in terms of building the compute that we do. It's not just about designing a chip. And the importance of understanding the developer community, the software, the systems, the forwards compatibility, the backwards compatibility is still right in front of us as the most important thing. What we do in terms of the systems we build, we're trying to find the lowest TCO for our customers for them to use. Designing extra chips, giving it an opportunity to do so, sure. Others doesn't surprise us, so that means something they will try. It's been interesting to watch how many designs actually never made it to market, and or designs even halfway. When we come up with a GTC and a new architecture, it's a scrap or even going back into work to get that done. So I don't think anything really has changed. It's perceived as an opportunity. Do I have another choice? Would that be? But almost all, if not every one of our customers is still on NVIDIA, even though they may think that they may go down a custom piece of it.
Yeah.
And that is because we are the best performant, but also the best TCO for what they're doing.
And I guess the pushback I get on that, and I agree with what you said, that the companies are making those investments. So they're investing in custom silicon, they're putting money into it. And I know Jensen made a pretty good counterpoint, which is, you know, we also invest in alternative foundries, but there's still only one TSMC. Is that kind of the way that you see it?
It is, just in case any different type of risk that we would have. There's many examples where what would I do if I only had one? What can I do in terms of monitoring a different perspective of risk? But yes, as you can see, we do spend a significant amount of our time with TSMC on that. But again, we wouldn't mind if we had another one or even if we had 3 of that. So yes, there's a lot of similarities to look at that.
Okay, thank you. Before we leave product, we could talk about a couple of non-processor things. Networking, you were down sequentially, and InfiniBand was down, and it seemed like you were much more focused on sort of Spectrum-X going forward, Ethernet. So what do we take away from that? Is there still going to be growth from InfiniBand? Is there, you said you're going to grow in networking this quarter. Just kind of generally the prospects for your networking business around that.
Okay. We believe there's an opportunity for growth both on InfiniBand and Ethernet. Both of these are very important to what we've put together in the clusters. Focusing on the moment data enters into a data center to leave is a very important part of why our networking has been so key for many of the clusters that have been put together. Our InfiniBand, a very important full end-to-end system that stems from the days of the early with Mellanox, and all top supercomputers are using InfiniBand. And some of the best features that we have in InfiniBand, we're going to take now to Ethernet. Ethernet inclusive of Spectrum X. Ethernet here is not just general purpose Ethernet, it's Ethernet for AI. As we have really engineered Ethernet, which is often the standard for enterprises, we're now going to use that same standard of Ethernet, but focusing on what we can do in terms of AI. We're moving from NVL8 or NVLink 8 to our NVL72. This is where clusters are becoming larger in size. You've heard us discuss where we're looking at 100,000 GPUs together. That NVL and the switching that we have done has been essential both for the InfiniBand, but now also for the Ethernet. You'll see us grow throughout this year. We know we'll grow in terms of in Q1, and our networking business will continue to be a big part of the performance that you're receiving in our full system.
Okay, thank you for that. Just last product question. There's a lot of noise out of Taiwan about supply chain moving this way or that way. I guess I won't go to the specifics of it, but how should we think about all of that? I mean, it seems to me that the more Blackwell you have, the less Hopper you need to build. There's things like that that are going on. It doesn't seem like anything you're saying about this quarter or the demand in the back half of the year would suggest that there's been any change in trajectory. So you just help us interpret those data points.
Where we are right now with our Q1, doing exactly what we did in Q4, scaling that supply to meet the demand that's in front of us. We do have demand that we do want to catch up with the customers, but we have strong demand for Blackwell overall. When you think about what's happening in the supply chain, keep in mind when we are talking about what we needed for Hopper, that was more than a year ago. What we had to determine in order to ship the amount of Hopper that we even did in Q4. It takes that long in terms of scheduling and processing with all of our different suppliers. Many of our suppliers have been with us for nearly 30 years, but keep in mind, we have been a big partner with them, scaling the capacities that they need in order to come to market with the size that you've seen us over even just these last 8 quarters. So there's a lot of noise in there, but the key thing is with every new kind of architecture, supply is first off what we've got to scale to. As we do know, we have very, very strong demand of Blackwell in front of us.
Great. I'd like to talk about export controls. Obviously, another anxiety that the market has. Maybe first starting with the Biden AI diffusion rules that were announced in early January. As we sit here today, those are still supposed to go into effect in May. Is that still the working assumption? And, I'm not asking you to predict the unpredictable, but, how are you planning for this? Are you planning as though that's 100% the rule? That's probably the rule. There may be new rules. Just how do you plan in an environment like this?
Okay. So the Biden AI diffusion rule did come out in the middle of January, or essentially a couple days before Trump came into office. And so our discussions with the U.S. government is having sure that they reviewed what this AI diffusion rule means, what it means not to us, but really what it means to the globe, what it means to the many, many countries that are out there. There's a very strong part of it focusing on tier 2 countries around the world, and with a goal in terms of licensing compute for those countries. So we do believe the government is aware. They have and are studying the AI diffusion, and we spoke with them quite a bit in terms of the challenges with that. Do we think it's good for compute globally? Do we think it's good for us from a compute? No, that's not the case. But at this point, AI diffusion is just under review unless it is changed by the US government, and it does go into effect in May.
I feel like what you would want here is there's going to be clear restrictions in some regions, and you're going to work to comply with that. I think the risk that I worry about is that you need a license to ship into other regions where the presumption is yes, and so if everybody, this is happening very fast, we're investing very quickly. If you're going to give it to them, give it to them. Don't make us wait 6 months for a license. Do you think the government can be receptive to that kind of a conversation?
First, I would say I would love to see a different output of AI diffusion.
Yeah.
Let's just say on that piece. On the impact of what this could be, the timing of licensing is unclear. Do we believe possibly that the licensing would work out? It's just quite complex to think about the globe as a total and the amount of countries that would do there. So I think our first plan right now is to help them understand there are better ways. We truly understand what they think about from a tier 3 perspective and really protecting the US from any military actions on that. And I do understand that, but let's hope that they can rationalize a better process for AI diffusion.
Okay, thank you for that. And then the H20 product, which is purpose-built for the China market, meets the restrictions. I think we must have a microphone issue. A lot of focus on that. Does that go away with these restrictions? The thing is, it seems to me that product becomes less important over time anyway, because there's a threshold of performance and you're just surpassing it by so much that, like you've said over and over again, that market's going to be very competitive. A lot of people can compete with you when you have to be X% below what you're capable of doing. So, how important is H20 if that product does get phased out? Does it, just give us a sense of the impact that could have?
So our H20 product was designed under the current export controls, and it has been a product that we have been able to reach demand in China for just very simple models that we are all using here in the US. So the concern that you have, though, is those performance levels are so low. What you are seeing right now with an H20, it's about 25x lower than what you would have in terms of a Blackwell. Going any lower would really be difficult because what it evolves is competition in China. Competition now speaks up and gives an opportunity for what can be available now in China. So a really difficult situation for us, and we have been monitoring the amount. But the amount that we are shipping into China versus what we had way before the export controls we're at about half that level. So what we see in the current quarter that we are in the guidance, we're going to stick at about that same percentage, at about half the level of where we were before export controls on this piece of it. H20, we'll ship it as long as the demand is there, and as long as it stays within the reasons of the export controls.
Okay, great, thank you. So I have 2 gross margin questions, then I'll open it to the audience. See if I'm sure there's more. So gross margin was a little worse than people had expected for April, and the return to mid-70s maybe takes a little longer. Can you talk about the underlying issues there and maybe some anxiety that it's competitive, something like that? It seems like it's mostly the stuff you've been talking about, but can you just give us a sense of, what's been pressuring gross margin?
Yeah. The systems that we are building, all working well. We're very excited to bring this into market. But remember, we're escalating. We are escalating everything from any form of speed that we can do to get these to our customers. We will take those actions. That's going to give us the time in the second half of the year for us to focus in terms of adding additional suppliers for many of the material that we do, working in terms of fine-tuning our cost structure. That cost structure can be everything from time services as it can be the actual components. So we're right on track for both here at this quarter, and we do absolutely see a path for the second half of the year to get back up to the mid-70s.
Great, and on that mid-70s number, I guess, is this just the normal thing that you get to mid-70s at maturity, you introduce new products and kind of go back to this level? Or was there something anomalous about Blackwell where there's more.
Blackwell certainly had the anomalous because we had to do the mass change,
Yeah.
okay, which really, got us back on schedule. The mass worked very well. But again, we do want to meet what the customers' desires were. They've got their data centers up and going, and we need to finish out and get that compute to them as early as possible. So really, it was just that piece of it. But no, I don't expect any of this going forward. I think we can focus and maintain just as we end the Q4 in the mid 70s and continue past that.
Great. Let me see if we have questions from the audience. I know there's a lot of questions from the audience because they all emailed and said, ask her this, ask her that. So I know they're there. Anyway, we'll keep going. OpEx, your OpEx has come up quite a bit. I know it's hard to keep pace with what your top line has been doing. So how should we think about that? You're spending about a 16 billion run rate on R&D. That's a lot. To me, it mitigates some of the anxiety about competition when I see what you're doing there. But what's going to happen to those spending levels over time?
Yeah, we have the ability to uniquely continue to ramp multiple different architectures based on how we're organized as a company. And we have made a tremendous amount of innovation work in terms of our R&D teams and bringing on talent. The interest in talent in our company is not a shortage by any means. Tremendous amount of engineers really wanting to join the uniqueness of NVIDIA and how we're structured. But we, again, are focusing on more and more innovation. You're going to see at GTC, not only us focus in terms of our next version of Blackwell, but also coming in terms of Rubin going forward. That takes not only the engineering, but our engineers work on compute. And we are working in terms of innovating and making sure everything that we're bringing to market meets those goals of bringing this to market. However, how fast can we go? You're right, it's very difficult to keep up in terms of the revenue growth that we did. And we're actually careful about it. More and more of the same versus being able to absorb the talent that we've brought in, making sure that is all in line before we reach the next window for more hiring. But we're doing it carefully. But yes, you will still see us grow probably in about the mid-30s% this year. A little bit lower than last year, but still growing quite strong.
So maybe we could talk about some of the future, more growth, longer-term growth initiatives, starting with software and services. You've talked about your software revenue stream growing over time. You've also talked about offering, various cloud services in partnership with your cloud customers. Can you talk about the investment in those initiatives and how that's paying off?
Sure. Software is an important part of not only our full outlook that we have. It's not just being a hardware sale, because so much of what we do is fueling software 2.0 going forward. In order to think about the evolution of how software is done today and how software will do in the future, we also have to have a big part in that software connecting our systems all the way to the application and up through to the APIs. We have developed a very strong amount of applications and libraries that help so much of this industry go forward. Your enterprise customers are a high focus. This is not where they have that hardware engineering and or the software engineering to reroute and rethink about their software going forward. We've built out these models for them. We have a tremendous amount of help that we do with them. NVIDIA AIE and our NIMs are some of the two most important things that we see for this market. They look in terms of licensing our NVIDIA AIE. That gives them the hold at NVIDIA to help them with keeping it current, keeping the security concern for any of their mission critical applications that they do. NIMs. NIMs is an important part that we do in helping them take their models, make them better, optimize them. They'll bring them on to our DGX cloud so that we can help them optimize and bring all of their software needs to market with ours. These are truly a joint effort, software and services together. But we just about left this quarter with strong bookings at closely a run rate of about $2 billion. And I think we're going to see this significantly grow going forward as well.
Great. And then some of the longer term projects around Omniverse, humanoid robots, things like that. I think, I didn't believe 100% of Jensen's vision a decade ago about AI. So I'm going to listen this time, when he talks about these things. But how much are you investing in those projects? And what are the aspirations? These are obviously manifestations of physical AI and things like that. But do you want to build robots? Do you want to be in the business of doing the hardware, or are you more in an enabling role in that?
Okay. The physical AI and the robotics is a really interesting piece. We've been down this journey now where everything that we've seen from generative AI now growing in terms of to agentic. Past agentic is going to be physical AI and the robotics. Now, if you think about it, there's some similarity to what you're seeing with the transportation industry and seeing with automotive. You've got a brain in the data center. You've got a brain inside of the car. Software, which has been fueling, and models that have been built, really understanding the physical landscape of what they're doing. So robotics and or physical AI are more of the same. Let me get a full picture of the warehouse, the full picture of the manufacturing with Omniverse. Let me redesign how the robots work in there. Additionally, what will we see in terms of robots that will be walking and or hauling transportation items and things like that? Is it our plan to build robots? It would be asking us the same thing. Do we want to build cars? No, but we do want to be both a partner in terms of the compute that is going to be necessary, the design of that, but also the software platform that will be needed. And I think you'll just see more and more continuation about what we're doing with automotive that can also be applied to what we're doing with investments in robotics or physical AI.
And given the amount of time it takes the automotive industry to adopt stuff, you might see the technology manifest sooner in other areas.
I think it's going to move a little bit faster. Certainly on the robotics, there's been a lot of different techniques, certainly starting from some of the best things that we saw with the cars. The cars started with a lot of the startups building up, and you're seeing the exact same thing with the robotics.
How much of the investment is it going forward? Because one of the arguments we get is I say NVIDIA is investing this much in R&D. It's hard to overtake them, and people say, yeah, but they're spending on these other things. Can you just give us a sense for how much of it is going to the green shoots types of projects?
So remember, we have a universal architecture, every single version that we bring to market. What that means is our architectures can be used for data center, can be used for gaming, can be used for our professional visualization workstations. The same thing in terms of all that are building out our compute and building out our designs, status quo. Now we're just going industry specific, so we do have some additional investment there. But again, not our largest piece of it. We don't have to go there because we have been a unified architecture together.
Great. So I suspect you've had some large investor meetings today and recently. Can you just talk to, the final question, maybe just catch all, are there concerns that people have that you think that they shouldn't have? Are there things that people should understand about what NVIDIA is doing in 2025 that maybe people have misconceptions about?
Yeah. I'd say the largest statement that we constantly look at is, are we done? Are we at the peak? Are we at the peak of what we're going to see at AI? And I think the vision that we see and the vision that we know, knowing that the installed base of general purpose computing needs to be transformed to accelerated computing, just to manage the significant amount of data, but also to deal with the needs for AI and what AI will be for us in the next decade. So there's $1 trillion of an installed base. There's more than $1 trillion in terms of focus in terms of AI. So is this it? Absolutely not. Is there still growth coming and in front of us? Absolutely. So as far as we see, every time that we may be here at stage, every time that we may be here at GTC, we're going to show you again more opportunities of the advancement of AI and how it will be infused in our everyday lives going forward.
Great. That's a great place to wrap up. Thank you so much.
All right. That was a good place to wrap up because the stock just went above $118. It might fall below that. It's been sort of teetering since the event started, which was really a lot of these red candles here. But you can see just sort of the path that we took during the call. I think that she's absolutely right. I mean, Nvidia is built for the future, and that although people are getting a little bit worried about things that might be out of their control, the things that are in their control, they are absolutely the best in the world at doing. Okay, and that whether it's AI that's going agentic and then into all these applications will then translate, to autonomous vehicles, to robotics, to all of these other things. Wow, big red candlestick. Holy crap. But regardless, I believe that the stock over the long term is going to be a massive part of my portfolio. It already is. It's the largest company in my portfolio, and it's seeming like nothing is even close. I mean, the gap between my first and second position is like about the size of my SoFi position. So it just goes to show you just like how much I am betting on Nvidia, and I continue to buy more shares today. So yeah, I mean, not specifically today, but in this general range in the teens. Yeah, holy. So, ladies and gentlemen, I'm going to let that go. That'll be the NVIDIA conference fireside chat with their CFO. But until next time, thank you all so much for watching. Really do appreciate your time. Bye-bye for now.